I know you've been watching in anticipation to see the unemployment rate in the US, 8.9%, 2.5-year low.
Interesting you pick out that number, because I think something with a 8 handle on it is obviously positive, brings it down from that period where it was kind of right up around 10. But the number was definitely in line. I mean, people have been looking for something around the 200,000 jobs added, and also for some positive revisions of the prior months. So that looked positive, and that threw, what people were expecting. Not a huge market reaction, but remember the last 2 months we had numbers that were less than people were looking for, and then we had a sell-off at this tail end of the week.
So I was wondering why the unemployment rate, many say that it's artificially low at that 8.9% level. 3 simple words I have for you: labour force participation, Paul, and it's currently sitting at 64.2%, unchanged from last month, and it's still at a 25-year low. So if we see that participation increasing, that means that the unemployment rate could actually tick up.
So what that means is that of those that are potentially economically active, excluding disabled people that are over the age of 80 and children, in the United States, that's the degree of participation. But we know that there are certain people that are not likely long-term participants in the labour market. But the fact of the matter is that the jobs went to China. So, if you have a major crisis like this, then in an economy like that, there's going to be a massive uptick in productivity, because companies sensibly fire all the useless people. So those jobs are not coming back, they've gone.
So if the LFP in the US increases to its 25 trend line average of 66.1%, then employment rate would be well over 10. You're saying that they're all going to China, the jobs are going to China.
Well, I'm sort of, conflating the issue a little bit. They didn't just only go to China, they went to Mexico and all sorts of other places as well.
I'll tell you why they're probably also going to go to China even further. It seems that the minimum wage in China is increasing by 14%. So some good news there.
So maybe the jobs went to Vietnam and to India and so on. But I think it's important to understand that in the United States, people that have a college degree, unemployment rates are like below 5. In certain regions of the economy, in certain sectors, there is very little slack in the labour market. What has happened is that all of the fellows who go to work in T-shirts are now out of a job, and that's not coming back because they don't have the skills in the modern knowledge economy. So it's these waves of destruction and reorganization in capitalism that happens, and we know that this has been very positive for companies. We've got company profitability running at record highs, but I think we've now reached the point in the US economy where companies that want to expand have to hire new people, because they can't just make the existing workforce work harder because they're scared. So now it's kind of at the point where I think the labour market starts to pick up. But I think it's part of the way the world has changed, and we need to recognize that.
Okay, well, moving on to the overall trend this week, down, up today, looking slightly softer.
Yeah, it's been tricky.
Jones,
those people who sort of trade momentum or swing trade, I think have found it very difficult. You've had days where we've been sharply up, days sharply down. But, I think...
We've seen this before, so we well seasoned.
Yeah, and we know that we've come up a long way in the last 2 years, so now it's a little harder to work out whether we're in a recovery cycle. But I think it's now kind of like the market has risen to a level where the economic data we're now seeing says, okay, now that's sort of in line. The question is, where do we go next week and next month and for the rest of the year?
Where do we go next week?
Well, I think if you're optimistic as I am, I think you're going to continue to see gains in the market, but maybe not at the same sort of pace. And it will be dependent on, incoming data, as it always is. And I think we're going to see a normalization of economic circumstances. So you're going to have interest rates starting to go up. You saw the Bank of England guy talking about that this week. So inflation goes back to normal range. Growth goes back to a normal level, and so monetary policy goes back to a normal level as well. But it sounds like a sort of
perfect scenario that you're playing out here, Paul.
Yes, it's old Goldilocks, never too cold, never too warm. Were you speaking
like this during the crisis? Were you saying, oh, it's going to get better?
Always, and I couldn't believe that people were...
Eventually you'll be right.
I mean, I was looking at some of those stock prices in the crisis in the middle of March '09. I mean, they were just crazy low. I don't know how we kept our heads on.
So what's looking crazy low for you now?
Well, I think the sectors are somewhat different, but the ones I like are healthcare, technology, resources, all of that usual stuff. And the stuff that I don't like is still the stuff that I didn't like before, like cigarettes and paper and construction and volatile stuff like that. Yeah, I mean, gold, we can talk about that.
Wayne actually bought some gold stocks.
Yeah, I heard him saying that. Wow, huh?
Were you surprised?
I have to have an argument with him next week.